The squeeze that we're seeing in markets is going to be exacerbated by the fact that quite a lot of the gold, say in the New York Fed, in Fort Knox, West Point, whatever, is missing.
You're watching Silver News Daily. Subscribe for more.
Did you know that silver could be on the verge of a massive breakout, potentially outperforming gold and doubling in value within the next year? Sounds unbelievable, right? But what if I told you that global supply deficits, surging industrial demand, and weakening confidence in the dollar are setting the stage for one of the biggest moves in silver's history? Stick around because Alastair MacLeod is breaking it all down, and you won't want to miss what he has to say about why now is the time to act.
We've known that, or at least I've known, that China has been buying gold secretly ever since the early 1980s. The legislation which appointed the People's Bank of China as sole agent for the government in dealing in gold and silver dates from 1983. There was always this mystery that in the big bear market, which really ran from the peak in 1981 all the way through to 2002, there's an awful lot of gold seems to have disappeared because the West was selling it. I mean, a lot of the private portfolios in Switzerland were liquidating their positions. All this stuff was coming out, and at the same time, mine output was increasing. So it's something of a miracle that the price actually didn't collapse even below that sort of 250 level, which more or less marked the bottom. But the reason for that is that China was very, very quietly, taking gold when it was offered, not bidding up, but just quietly accumulating it. And I reckon, this is looking at trade flows. It looks like it was looking at, capital inflows, because, of course, all this was, again, handled by the People's Bank of China, as the sole agent for foreign currencies. All those flows, I reckon, at contemporary prices were the equivalent, 10% of them were the equivalent of about 20-odd thousand tons, 20 to 25,000 tons. So I feel fairly confident that that's the sort of number which they had accumulated before 2002, when the Shanghai Gold Exchange was set up and Chinese citizens were permitted to buy gold. Since then, Chinese citizens have accumulated a further 26,000 tons, roughly, figure like that. Now, that's not the only form of accumulation by Chinese citizens, because banks have offered gold accounts and the Chinese citizens are enormous savers. I mean, in the past, they've tended to buy property, which they haven't necessarily occupied, as, if you like, their pension investment. That has blown up. Stock market, and it hasn't been that attractive as far as the Chinese housewife is concerned. So they've been putting money on deposit and at the same time maybe buying some gold. I mean, we're talking about annual savings. I mean, savings accumulating. This is household savings accumulating at the rate of around about $2 trillion a year. So you can see that there's a huge great overhang, if you like, of potential money going into gold. Now, we've recently seen that the People's Bank of China has been reducing interest rates. And as a result of that,
As the global economy teeters on uncertainty, the cracks in traditional markets are becoming impossible to ignore. Inflation remains stubbornly above central bank targets, eroding the purchasing power of fiat currencies. While the Federal Reserve hints at cutting rates, the question lingers. Is this a move to stimulate growth or a sign of deeper systemic weakness? Historically, these conditions have always driven investors towards safe haven assets, and silver is no exception. Unlike gold, silver offers a unique dual appeal, acting as both a hedge against economic instability and a critical component of industrial growth. But here's the kicker. The demand for silver isn't just about preserving wealth anymore. With inflationary pressures mounting and the dollar losing its luster, silver is emerging as a weapon of financial protection for savvy investors. How will this economic storm reshape your portfolio? Keep watching, because this is just the beginning of the silver story.
Gold have been stood for delivery, and 1,240.4 tons of silver. I mean, these are huge, huge amounts. Now, we don't know who's actually taking this. Some of it, I guess, is remaining within the COMEX's vaulting system. But these, nonetheless, are huge amounts which are being taken out of the establishment's hands, as it were, and going into other hands. And also, if you look at the exchange for physical, I mean, some of the numbers going through there are just absolutely enormous. Now, we don't know which way it goes. I mean, exchange for physical can be inward going or inward coming or outward going. But it's a fair bet that we're looking at something which is, I think, likely to be the early indications of a crisis in the market. I have no evidence that that is the case, other than these extraordinary flows. It just reminds me of the situation we had, when we had COVID, everything shut down, and there was an absolute crisis in the exchange for physical market. I think Hong Kong Shanghai Bank lost something like $200 million on that market alone. So, you can't have a futures market where these enormous amounts are being drained out of it, of physical, and at the same time, I mean, premiums, on futures compared with physical have been rocketing. I was looking at it earlier this morning. Silver, it's come back a bit because they've bashed the price hugely. I mean, they really have. And a lot of that has been taking the wind, if you like, out of the futures markets. But this morning, there was a premium in the on the silver futures contract of around about 12.5 to 13% over spot. Why is this? I think that the reason is that hedge funds in particular have seen the problems in the market rising. They know that there's a lack of liquidity and all the rest of it. They never take delivery. They never buy the underlying stuff. They only deal in derivatives. So what they're doing is they're buying, they're buying futures, or they have been buying futures, really to put the squeeze, if you like, on the swaps. And it just smells like a bear squeeze. So we've had a big fall today. I mean, after some very, very big rises. But that a lot of that is just sort of deflating the futures. So there are funny things going on, DK. But it all looks like the markets are running into difficulties, and I don't mean difficulties leading to lower prices. I mean difficulties meaning that the squeeze on the establishment, I think, is really more intense than you would think.
The world is no stranger to uncertainty, but the current geopolitical climate is unlike anything we've seen in decades. Ongoing conflicts, escalating trade wars, and shifting alliances are creating a powder keg of tension across the globe. Investors are watching nervously as these events ripple through markets, driving capital into safe haven assets. But here's what makes silver stand out. It's not just a hedge against geopolitical instability. It's also a direct beneficiary of industrial and economic shifts triggered by these global events. For instance, sanctions and trade disputes are pushing nations to rethink supply chains and prioritize local production, leading to a surge in demand for raw materials like silver. At the same time, countries are racing to secure their economic futures, and central banks are hoarding precious metals like never before. Could these geopolitical tremors be the catalyst that propels silver to unprecedented highs? The signs are everywhere, and the implications are massive.
To buy, the central banks are continuing to buy. Basically, physical gold is bid only. Not only the central banks, but also sovereign wealth funds in Asia and all the rest of it, and also quite a lot of the super rich in Asia are accumulating gold, and this is in sharp contrast to the West, where we just sort of shrug our shoulders and say, well, why are they doing it? We are completely clueless about what's going on in the bullion markets. But as far as as far as the East is concerned, they see an increasing need to protect their currencies against an inevitable crisis in the West. And that crisis takes the form of unsustainable government debt, which is leading all G7 countries, with the exception of Germany, into a debt trap. The debt trap comes from two ways. I mean, it's not just the mounting debt. And we had extraordinary deficits for the first 2 months of the US fiscal year. I mean, what, 625 billion or something. I mean, it's just going up and up and up and up and up. As far as the foreigners are concerned, they see this and they see that there is absolutely no reason why they should buy US dollars and treasury debt at anything like these yields. And the problem is that if they hold off and they want even higher yields, it just makes the whole situation even worse. So what do? You get out of dollars. And to get out of dollars, I mean, you don't want to go into another currency because, the dollar is the king rat of currencies, as it were. You're going to go into gold, which is real money, and they understand it's real money. And that's what we've lost sight of in the West. And this is why Western vaults are being drained, if you like, of any liquidity. Every time gold rises, there's someone in the West who thinks, I ought to take profits. At the Chinese or the Russians or whoever say, thank you very much. So that's basically what's going on. It's the other thing that's extraordinary, which I think I should mention, is the amount of gold and silver that's being stood for delivery on COMEX. I mean, this is a market which, the whole concept of delivery on COMEX wasn't that anybody should actually take delivery, but it was literally to tie an expiring futures contract to the underlying metal price. But I was totting up the figures. I mean, since Thanksgiving, which is 9 sessions ago, 56.46 tons of
silver isn't just a precious metal. It's a powerhouse in modern technology, and its industrial demand is exploding. From the circuits in your smartphone to the photovoltaic cells in solar panels, silver is the unsung hero behind the tech revolution. And with the world racing toward renewable energy and electrification, its importance is only growing. Consider this. Solar installations are projected to account for nearly 20% of silver demand by the end of the decade, driven by the global push for a greener future. Electric vehicle production, another silver-intensive industry, is accelerating at an unprecedented pace. The numbers don't lie. Industrial demand for silver has surged by 11% in the past year alone. But here's the twist. While demand is skyrocketing, supply is barely keeping up. Silver mining has hit plateau with limited new discoveries and fewer primary silver mines coming online. This growing imbalance between supply and demand is setting the stage for what many experts believe could be a historic price rally. The question is, are you ready to position yourself before the rest of the market catches on? Stay tuned, because we're only scratching the surface of what's driving silver's meteoric rise.
I think the whole point of owning gold is that you've got something which you can go on, you can tie your credit to the value of gold, and you have to do that credibly. Now, part of that is the mechanism by which you do it. You've really got a central bank has to change its attitude. I mean, the attitude of a central bank at the moment is, we acquire gold and we hang on to it like that, and we're never going to let it out of our sight. That seems to be the current attitude. So they would be reluctant to, if you like, introduce a proper gold standard whereby, if you've got dollars, rubles, whatever, you're going to exchange them for gold at your desire, not, it's up to you. You've got the paper, You got to have the opportunity to catch it in for gold at the central bank or the issuer.
You mean like payable to the bearer on demand?
Exactly that. Exactly that. That's what you've got to do. One other aspect of this is that you've got to show that, you actually own the gold. I mean, you've got whether you do it by audit, whether you do it by independent inspection, whatever. You've got to, I mean, in order for the system to work, the public have got to have confidence that you're telling the truth. So, I don't quite know whether this is going to leave America with her dollar if, let us say, we start going back to gold standards, which I think is probably what the eventual outcome will be in the Eastern hegemons.
For years, the silver market has been battling a persistent and growing supply deficit. In fact, 2024 marks the fourth consecutive year of shortages, with a staggering 215 million ounces in deficit projected by year's end. That's not just a blip, it's a structural imbalance that's reshaping the silver market and fueling bullish momentum. Here's the reality. Silver isn't just mined on its own. Over 80% of global silver production comes as a byproduct of mining other metals like copper and zinc. This means that silver's supply is directly tied to the production of these base metals, which are facing their own headwinds in a tightening global economy. New silver-focused mines, virtually non-existent. Meanwhile, demand continues to surge. From industrial applications to investment needs, the call for silver far outpaces its availability. Inventories held in major depositories are steadily dwindling, with some experts warning that visible silver stocks could be exhausted in the next few years. This chronic supply-demand imbalance is what makes silver a ticking time bomb for price action. The big question is, how high could it go as the deficit widens? Stay with us as we dive deeper into the forces driving this market squeeze.
Well, basically, you only need to know one thing: all governments lie. They don't tell the truth. So, why believe your own government? Only a fool would, really. I can't add to that. We can see what happens. We know that there's been very substantial carry trade, which has involved leases and swaps of gold, which hasn't returned. I mean, a cynic would say that, Fort Knox is full of IOUs. I would also suggest that the New York Fed is full of IOUs. I mean, it's a sad thing, but, having made that mistake. The other thing which you should know is that under IMF accounting rules, the treatment of central bank gold is that if it is leased out, the central bank still makes the return that they possess the gold. Now, technically they do, own the gold. May not be in their possession, but they still own it because under a lease agreement, ownership doesn't change hands, it's just possession. So, the figures that are reported, a lot of them are fictional. In fact, you're probably all fictional. I mean, because as you rightly point out, the Chinese don't want to tell the truth. The Russians don't want to tell the truth. The Americans don't want to tell the truth. And everybody else is sort of saying no comment.
The U.S. dollar, long regarded as the backbone of global finance, is starting to show cracks. Inflation, debt crises, and the erosion of trust in fiat currencies are leading to one undeniable conclusion. The dollar is losing its grip as the world's reserve currency. And when the dollar falters, precious metals, especially silver, tend to shine. Why? Because silver, like gold, operates outside the traditional financial system. It's not tied to central banks or government policies, making it a haven for investors seeking refuge from currency devaluation. But there's another layer to this story. As countries and investors move away from the dollar, they're turning to hard assets to preserve value, and silver offers a unique combination of affordability and strategic importance. Central banks worldwide are hoarding gold, and silver is following suit as a secondary safe haven asset. The weakening dollar also increases the purchasing power of foreign investors in the silver market, driving up demand. With every dip in the dollar, silver gets closer to its long overdue breakout. So, how much longer can the dollar hold its dominance? And what does this shift mean for silver's future? The answers may surprise you as we continue to explore silver's path to explosive growth.
The New York Fed actually knowing what's going on. And this would explain the difficulties the New York Fed had when the Bundesbank turned up and said, first of all, we want to go and audit our gold in your vaults. And they were refused that. And then secondly, we want 300 tons of our gold returned. Not a large amount, given the amount of gold they had. And they said, well, it'll take 7 years to get it. They obviously didn't have it. It's obviously disappeared. And, Frank Venerosa, the analyst, he analyzed all this leasing, and it was a carry trade. I mean, there was a basis of a carry trade really through the 80s and 90s, whereby banks, took gold out of basically central bank sources, which they paid something like 1.5–2% lease rate for. And they were buying US treasuries, which were yielding, well, in the early stages over 10%, dropping down to 4.5%, by 1990. So you can see that, the original carry trade really has changed the amount of gold in Western vaults. Now, as apropos the statement that something like I think you said something like 60% of gold is now in sort of, if you like, the main central bank vaults in the West. I would say it's less than that because some of it is just not there; it's gone. So, it's an interesting situation. I think that this squeeze that we're seeing in markets is going to be exacerbated by the fact that quite a lot of the gold, say in the New York Fed, in Fort Knox, West Point, whatever, is missing. It's going to be interesting to see what the American government does about it, I must admit.
For retail and institutional investors alike, silver is quickly becoming the asset to watch. Why? Because the factors we've discussed, geopolitical tensions, industrial demand, and a weakening dollar, are creating a perfect storm that's hard to ignore. But what's even more compelling is how silver offers unique opportunities for every type of investor. For long-term investors, silver is an affordable gateway into precious metals, often overshadowed by gold but with significantly more upside potential. With prices still hovering below historical highs, the entry point is undeniably attractive. Meanwhile, for traders, silver's price volatility creates opportunities to capitalize on short-term swings. Institutional investors are also waking up to silver's untapped potential. ETF and mining stocks tied to silver have seen renewed interest as hedge funds and major players position themselves ahead of what could be a historic rally. But here's the question: will you act before the tide turns? As history has shown, the most significant gains often come before the masses catch on. So how will you take advantage of this moment? Let's keep digging as we uncover Alastair MacLeod's compelling case for silver's meteoric rise.
The returns on deposits have become less attractive. So I think we're seeing more and more demand, if you like, from the banks to cover their positions of unallocated accounts, if you like, or whether they're allocated, it really doesn't matter. But the Chinese banks, I think, have been covering their positions by picking up whatever gold they can. And I suspect that some of them have been, behind a lot of the standing in for physical on COMEX and elsewhere. I mean, they got to get it from somewhere. India, I think, the Indian government has realized that they've got to accumulate gold as well, and they have been accumulating gold. But I think perhaps India is more interesting in the silver market because she has been encouraging her private sector to become more environmentally friendly. And one of the programs has been to support the manufacture of, these voltaic, cell things. And of course, they take a lot of silver. So, there have been some fairly large purchases of silver, which I think, again, nobody's really selling silver. So, other than what you can get in the markets. And I think that this is what the stand for delivery, I think it's a source of silver as far as some of the industrial conglomerates in India are concerned. So, we've got that. Now, if you look at the situation with central banks, you mentioned that, the sort of more and more gold has been moving, if you like, out of Western vaults into other vaults. I think that's true. But on top of that, there is the problem of, what actually is the United States position. I mean, the United States has been trashing gold ever since 1971. And a lot of that has been supplying stuff into the market. And I think most of the gold which has been leased over the years has actually been from American sources. And so we're talking about the American Treasury and also the New York Fed. And I think that a lot of this has been covert without the real owners of gold.
While much of the spotlight is on gold, central banks around the world have quietly been increasing their silver holdings, signaling a monumental shift in how nations are securing their financial futures. Historically, central banks have relied on gold for stability, but silver is gaining traction as a strategic reserve asset, especially in emerging economies. This shift isn't random. Nations like China, India, and even Turkey are actively diversifying their reserves away from the dollar. These countries understand that in a world of economic uncertainty, tangible assets like silver provide unparalleled security. Some central banks are even repatriating their gold and silver reserves, a move that underscores the growing distrust of foreign vaults and global financial systems. Silver's unique dual role as a precious and industrial metal makes it even more appealing. As central banks prepare for what many believe could be a new monetary regime, silver is poised to play a critical role in this transformation. What does this mean for individual investors? When central banks move, markets follow. Are you prepared to follow their lead and capitalize on this trend? Stay tuned. As Alastair MacLeod's insights reveal just how big this shift could become.
Extremely difficult. Obviously, you've got to have a roof over your head. That's important. So you've got to make arrangements for that. I think that, if we get a complete collapse of currencies, it's going to be complete chaos, quite frankly. Economic chaos. I think supply lines for even basics like food and all the rest of it and fuel are going to be hard to come by. So I think, there's a sort of certain amount of making sure that you've got something in stock, if you like, against this event. And on top of that, my advice basically is get out of credit. If credit's going to collapse, you don't want to have any credit. And you don't want to have anything which relies on credit for its pricing, for its value. Stocks, for example. And also, obviously bonds. One of the things that will happen in this scenario is that as the purchasing power of currencies declines, you will find that interest rates will rise. They're bound to. And rising interest rates, of course, will bring about a load of bankruptcies in the economy. You will crash equity markets. And I think that's almost a dead cert in the first half of 2025. Bear in mind also, all these people who are terribly keen on Bitcoin and all the rest of it, that's no escape. On my Substack, I put out an article earlier this week which showed the correlation between NASDAQ and Bitcoin. And the correlation is very, very high. So when the tech thing blows up, so will Bitcoin. And, you've also got the sort of thing going on in Bitcoin is indicative of the top of a bubble, just the same as the valuations in some of these tech stocks, are top of bubble type stuff. When you've got people, like Michael Saylor with his company, having 5 convertible bond issues, the last one at a premium of 50% to the share price, so that he can invest in more Bitcoin. In other words, ramp the value of Bitcoin up. When this starts going into reverse, the whole of that pyramid will collapse. We had a precedent for this in a completely different context. A guy called Robert Maxwell, who owned the Daily Mirror. He raided the pension funds, and he raided the pension funds to support his own share price. And eventually, when that support ran out, the whole thing imploded. And he ended up committing suicide. So, I can see we've got exactly the same condition that Maxwell generated, puffing his own share price, and eventually the collapse. We've got exactly the same thing happening with various practitioners in the Bitcoin market. And anyone in there is going to get very, very badly hurt. So get out of credit. Bitcoin is nothing.
Alastair MacLeod has been sounding the alarm for years, and now his predictions about silver are aligning with the reality of today's market. According to MacLeod, silver is undervalued in ways that most investors don't realize. It's not just about supply and demand. It's about how silver fits into the larger macroeconomic puzzle. MacLeod argues that we are on the brink of a monetary shift, with central banks and governments losing faith in fiat currencies. Silver, along with gold, is becoming a key pillar for this emerging monetary framework. But here's the kicker. While gold gets most of the attention, silver has far greater upside due to its dual role as a store of value and an industrial necessity. He also points out a hidden force driving the silver market: unreported and unallocated silver contracts. These create the illusion of higher supply than actually exists. As these contracts unwind, the true scarcity of silver will be revealed, setting the stage for an explosive price rally. So what does MacLeod see next? He predicts that once silver breaks past key resistance levels, it could lead to a frenzy of buying unlike anything we've seen before. And when that happens, the question won't be whether you own silver, but how much. Are you ready to act before this tidal wave hits? Let's keep going, because there's more to this story.
Currency is credit. Gold is money. They are exactly the same if you tie one to the other. It's when you untie them and you have credit floating on its own that you get the problems. And that is what we have. And we've had 50 years of it now. And that era is coming to an end, in my view. It's coming to an end because the problem of having unattached credit, unattached from gold, is that it removes all discipline from governments. And consequently, we have had an accumulation of debt, the other side of which was an accumulation of credit, in the form of credit bubbles, each bubble rolling into the next one, so that we've got a veritable tsunami of credit crashing on the shores. And that, I think, is going to happen next year. I think it's going to, the more I look at it, I find it very difficult to see how this current system can last more than a year or two. I think it's doomed. It really is, because credit is unattached to gold. And you can have CBDCs, whatever. It doesn't make any difference whatsoever. And incidentally, I would have thought that, it's interesting that the commercial banking network have said absolutely nothing on these CBDCs. And I've said this before, I can't see how the US commercial banks would tolerate this anyway. It would require legislation. Apart from enormous sort of back testing, making sure the systems work and all the rest of it, it requires legislation. And bear in mind that every senator, every congressman, in your parliamentary system is bought by the banking system. So are these guys going to vote for Christmas? I don't think they will. No, Turkey's voting for Christmas. I don't think it's going to happen. So, I think this whole thing is stillborn. And don't get me going on cryptocurrencies. I mean, that's a scam if ever I saw it.
The pieces are all falling into place. Economic uncertainty, skyrocketing industrial demand, and central banks' quiet but deliberate accumulation of precious metals. Everything points to silver being at the cusp of a major breakout. The question is, will you take action before it's too late? Now is the time to evaluate your portfolio and consider the role silver can play in securing your financial future. Are you ready to hedge against inflation, protect your wealth, and even capitalize on one of the most underappreciated opportunities in the market today? Let us know your thoughts in the comments. How do you see silver fitting into your investment strategy? And what's your take on Alastair MacLeod's bold predictions? Join the conversation because together we're uncovering the full potential of silver. But don't go anywhere just yet, because in the next step, we'll bring everything together and reveal exactly why silver is perfectly positioned for a historic run. You won't want to miss this conclusion.
I'm tempted to say that if it's too complex to understand, it'll never actually work as money, because, people aren't idiots. They really aren't. When you get a bank deposit or you have bank notes or whatever, you know what that is. If you're going to start mucking around, like central bank digital currencies. If you read the stuff that comes out of the Bank of International Settlements, they reckon that this is a tool for the central bank to be able to manage where the stimulus in an economy goes. I'm sorry, but it's just not practical. And not only that, but it's just another form of fiat, an extension of fiat. It'll have the same status, if you like, as existing currency, and the thing will collapse. And I think most people who talk about these things basically don't understand money, and they don't understand credit. We have even Nobel Prize winners in the form of Krugman and Stiglitz who don't understand how banks create credit. They are on record of getting it completely wrong. Now, if these luminaries don't actually understand credit, don't understand money, then what hope is the individual? Yeah. So I think a lot of the commentary on this just shows complete ignorance of credit. I mean, there was this paper that was produced by a Russian and a Chinese guy about the I can't remember what it was called now. The new unit that this was going to be the new currency, if you like. This was the proposal, and it got everybody terribly excited. But actually, if you read it, it was quite clear these guys hadn't got a clue what they were writing about in terms of credit. They didn't understand credit at all, so when you look into it a bit further, you find that these aren't two banking officials, one Russian, one Chinese. They're two fund managers, one a Russian fund manager of Archangel Investments or something, and a Chinese guy who I think came from Hong Kong. It's, but this was sort of taken, if you like, as authoritative stuff. It was taken as authoritative stuff by people who, in turn, didn't understand the topic. Really, it's very, very simple.
Now that we've broken down all the critical drivers, global economic uncertainty, surging industrial demand, structural supply deficits, and decline of the dollar, it's clear why Alastair MacLeod believes silver is on the verge of a historic breakout. But here's the big picture. These forces aren't just coincidental. They're converging at the same time, creating a rare and powerful opportunity. Silver's unique position as both a monetary and industrial asset means it's poised to outperform other investments in this environment. Whether it's the green energy revolution driving unprecedented demand for solar panels and EV, or central banks repositioning for a world less reliant on fiat currencies. Silver is positioned to play a critical role in the global economic transformation. McLeod's bold predictions may seem far-fetched to some, but the numbers don't lie. Supply deficits are widening, industrial usage is surging, and investor demand is growing. It's not a question of if silver prices will rise. It's a question of how high they'll go. Could it double, triple, or even more? The groundwork is already in place. So the real question is, will you take action now, or will you look back and wonder why you missed the signs? Remember, this is not financial advice, but an opportunity to explore the incredible potential silver has to offer. Don't wait, subscribe for more in-depth insights and stay ahead of the trends shaping tomorrow's markets.